Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is Monday, November 4th, the first day of a new trading week, a new trading month actually. Welcome to November. I know we started in Friday, so if you did any investing on Friday, good for you. But this is really the first full week, and we are going to take a look at Vistra Energy. This is out of the utility sector. If you could do me a big favor, hit that thumbs up button down below. If you find any value in the content, make sure you are subscribed to this channel. Hit the subscribe button. Join us on this journey to financial freedom. Join the vested interest community. Click the notification bell so you're notified whenever we put out any new content. I do this stock pick of the day video series Monday through Thursday whenever the market's open. We take a look at a company's stock that's pulled back on the day and see if it's presenting any value. Watch time is another metric that the YouTube algorithm uses, so if you could watch the videos to the end. And there is a new feature on the channel. If you get any ads on them, if you watch those, the channel will make some money. That is one of the ways we are able to monetize the channel, as well as an earn feature down below. If you wanted to make a donation, I think there's a $2, $5, $10, $20 tiers. No pressure. Completely understand we all have a lot to pay for it, but if you can do that, that'd be great. Any funds I do make will go into the portfolio, mine as well as the two custodial accounts I have for my daughters. And again, thank you to all the subscribers out there. You guys are awesome. The channel continues to grow because of people like you. Now, this is the vested interest stock screener. This is how I look at a company on a high level. Thousands of stocks out there in the stock market. This is a way I can run through a screener, see if I am interested in doing more of a deep dive. If it meets the screener here, it does make it onto my watch list, and then I do more of a deep dive into the financials of the company, look at their balance sheet, their income statement. I'm looking for stuff like debt to equity ratios. Do they have more assets over liabilities? What's their PEG ratio? What's their price to book compared to other companies in similar sectors? Is their revenue growing? Are their margins growing? A lot of good information that you should understand if you are investing in individual stocks. And if you don't want to do that, that's okay. If that's a little much for you and you don't know how to do that, you can still invest in the market through an ETF or an index fund. Something Warren Buffett would recommend is the S&P 500. So like a VOO, VOO, that's Vanguard S&P 500. And I actually think he owns that in his Berkshire Hathaway portfolio. You could look at his 13F, and I believe another one he owns is SPY, which is another S&P 500 ETF. So anything that tracks the S&P 500 is what Warren Buffett would recommend. Then while you're doing that, dumping money in weekly, monthly, annually, yearly, whatever your investing timeline and strategy is, you could learn about investing in other stocks. And once you got comfortable, maybe dip your toes in. But that's a little much for here. Let's get back to Vistra Corp. You can check them out at their homepage where I pulled this information from. Again, they are out of the utility sector, and their homepage is vistracorp.com. That is their homepage where I pulled this information from. The companies making up Vistra have a rich heritage that stretches all the way back to 1882. We are proud of our commitment to service and the role we have played in the economic, civil, and cultural development of Texas and beyond. Here is a brief historical timeline of how Vistra came to be and the leading integrated retail electricity and power generation company in the U.S. So they are a power generation utility company. That's what they are. Started again way back in 1882, so been around for a while. Dallas gets electric lights provided by the new Dallas Electric Light Company. So obviously they've merged companies over time. 1912 was a big one. Texas Power and Light Company forms for the consolidation of 13 electric companies brought together by Electric Bond and Share Company, a subsidiary of General Electric Company. TPNL serves much of North, Central, and East Texas and several counties west of Fort Worth. So that's really when it started to grow. In 2023, in March, Vistra announces that Energy Harbor Corp will merge with Vistra into a newly formed subsidy. Yes, they've merged several times here over the years, and this isn't even half of it. If you go to their homepage, you can see all the way from 1882, and it's like every 4 or 5 years there's something going on where they're merging with another company to make a bigger company. So that's what it seems like they've done over time. In March, Vistra completes its previously announced integration with, here's another one, with Energy Harbor Corp, creating a leading integrated retail electricity and zero carbon generation company with the second largest nuclear fleet in the country, along with growing renewable portfolio. So it sounds like their main producer of energy right now is nuclear. They're in the renewable space. So I'm going to assume, and whenever I looked at their webpage, I did confirm it. A lot of that's electric, solar, wind generation as well. I didn't see much in the way of water, like dams or anything like that, but definitely they had wind and solar panels that they use for their renewable. But their main right now, main provider of electricity in Texas is their nuclear fleet. Now, the reason we are taking a look at them, down 3.18% on the day. We are talking about Vistra Corp, ticker VST, out of the utility sector, closed out the day at $115.71. 52-week range as low as $33.84, as high as $143.87. They are nowhere near their 52-week low here. Not really up against their 52-week high either, but definitely tilting that way. A market cap of 39.753 billion, a beta of 1.12, so they are more volatile than the overall market. PE ratio very high, wow, 85.08. That's higher than a lot of tech companies, so they would have to be growing extremely fast to justify that. Earnings per share, EPS sitting at $1.36 per share. Earnings date November 7th, so that's coming up in a few days here. Forward dividend, 89 cents. I believe they're a quarterly payer. We'll see that here in a little bit. Very low starting dividend yield, 0.74%. Ex-dividend date is December 20th. Looks like their last one was actually September 30th, their last payout, and then their next ex-dividend, December 20th. So I don't know if they're going to pay out again this year or if that's going to float into January. One-year target estimate, at least according to Yahoo Finance, $141.93. So that's back, not quite to their 52-week high there, but definitely some upside from where they currently sit. Now, jumping over, we're going to take a look at dividend yield theory to see if this one's potentially presenting any undervaluation. To do that, we look at their 5-year dividend yield average, 2.51%. We compare it to their current, 0.74, or over here where it says forward, 0.74, same number. Now, since this is lower, and it's much lower, that speaks to overvaluation on this one. Payout ratio is under the 75% that I look for at 62.61%. Jumping down, I like excuse me, growing free cash flow, because typically if a company has growing free cash flow over time, they have growing dividends as well. Looking at their free cash flow, you can see negative 1.2 billion here. That's not a very good sign, but utility companies, energy companies, they are very capital intensive, so it's not uncommon to see negative numbers. 2022 here, you can see negative 816 million. 2023, they are positive there at 3.7 billion. Looks like they're down though in the trailing 12 months only at 2.2 billion, even though we have the rest of November and December to go still in 2024 numbers. They're up and down, right? Like utilities and energy companies are. Now, one thing I do like is they're repurchasing shares. 471 million in 2021. 2022 saw a big jump up to 1.9 billion. 2023 down to 1.2 billion. And so far in the trailing 12 months, they're continuing that trend at 1.3 billion, just slightly outperforming what they did in 2023. Now, jumping over to stockanalysis.com, I'm not affiliated with stockanalysis.com, just one of the sources I pull information from. That's where this information that we're going to talk about here comes from. And I always recommend more than one source for information. Yahoo Finance was the previous page, also not affiliated with them, just another source. I always recommend more than one source so you can make sure the information you are getting is accurate and up to date. Now, they do have 9 analysts that have taken a look at this. They call it a strong buy. A low estimate of $79, which would represent a 31.73% decrease from where it currently sits. Average estimate of $135.89 would represent a 17.44% increase from where it currently sits, pretty close to that, what we saw with Yahoo Finance on the previous page. And a high estimate of $178 would represent a 53.83% increase from where it currently sits, and all the while you could collect that very low dividend yield where they currently sit. Now, looking at statistics here, I like to jump in and look at return on equity and return on invested capital to see how well a company is reinvesting back into itself. ROE, I like better than 10%, which is good. They're at 12.66%. Now, return on invested capital, ROIC, they are lower than I like at 5.48%. Again, I like over 10% here. So they wouldn't get a check there. Now, their EPS growth forecasted over the next 5 years is very nice at 22.24%. I like anything over 5%. Revenue growth forecasted over the next 5 years is over 5% at 5.85%. Now, again, when you saw that price to earnings ratio earlier, I don't know if 22.24% earnings per share growth justifies a price to earnings in the 85 range. I'll let you be the judge of that, but it seems pretty high to me. Now, going on their dividend history here, quarterly payout ratio, they're saying a little higher than Yahoo Finance had it, 62%, I think, where Yahoo had it. Stock Analysis has it at 67.27, but still under the 75% I look for. If you split the difference around 63, 64%, even at 67%. Dividend growth at 6.6 or 6.46% dividend growth here. So nice dividend growth, low single digits, mid-single digits, I mean. Growth of 5 years, Buyback yield is positive 8.06, so they did a bunch of buybacks there on the good side, and shareholder yield at 8.83%. They must be returning a lot of shareholder value here. That's a good number. Now they do pay out on the March, June, September, December timeframe, like most companies do. Going back to June 2022 here, you can see they paid 17 cents and some fractions of a penny. Raised that up September 2022 to 18 cents and fractions of a penny. December 2022 raised it up again to 19 cents and some fractions of a penny. So they almost do a raise every quarter. March 2023 up again to 19 cents and some fractions of a penny. 2023 June up to 20 cents. September again up to 20. December 2023 up to 21 cents. And the most recent raise, we're going to skip a few of these. December 2024 up to 22 cents and some fractions of a penny. So yeah, it does look like they raised that. I mean, it's not huge raises, but 6.46%, and every little raise helps, and they're doing it every quarter. So very consistent for what they're saying the last 5 years. Yeah, not bad. But what does the screener say? Understand the business. Yep, well, that's where we start. They're a utility company. They sell utility primarily. They sell utility, and they manufacture electricity or produce electricity primarily through their nuclear, but they do have their foothold in some renewable energy. Solar and wind is what I saw on their website. Growing free cash flow. No, it's up and down like most utilities companies are. Growing dividend. Yes, it was growing, and actually it's pretty steadily growing quarterly. Dividend payout ratio is under 75% in the mid 60s. Dividend yield theory says they're potentially overvalued, and significantly so. They were not within 15% of a 52-week low. Return on invested capital, only one of these. Return on equity was over 12%. Return on invested capital was only around 5%. Earnings per share growth in the 20s. So check there. 1, 2, 3, 4. This one doesn't make it onto my watch list. Let me know what you think of Vistra Corp in the comment section down below. Well, as always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the best industry community. And drop a comment down below. Let me know what you think of the video. Let me know what you think of Vistra Corp. Is it one in your portfolio? Is it one you're watching? Or maybe you're part of that 3% today that was selling. I'd love to hear from you. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like this you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I'll work into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. You can't lose money. You should never invest any amount you're not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and selected criteria, or seek the advice and counsel of a certified financial advisor.